an economic slowdown causing problems with credit markets. And for number 4A, I'm going to put China's growth crisis. Okay. So China is the second largest economy in the US. They're a driver of the Pacific Rim. Two of their largest trading partners are Australia and New Zealand. Okay. Japan as well. So they help drive very large and very important economies. Australia and New Zealand, while people don't talk about them, they're commodity-based economies and therefore extremely important to the global economy. Okay. Same as Canada. Canada is a commodity-based economy and therefore extremely important. China's growth bleeds into Japan, Australia, and New Zealand, and so do their slowdowns. The economic slowdown globally breeding into credit market conditions is very worrisome to me, because if you have tighter financing conditions and the market is slowing down at the same time, you're unable to finance those tighter conditions. So that's in part why I don't think we're going to get 7 rate cuts. As of yesterday, the market was pricing in 7 rate cuts for the Fed. Okay, as of today, they're pricing in 6. I can actually show you that if you guys want to. So if I put this on the screen now, this is, by the way, this is the CME Fed Watch Tool. If you guys don't know where to find this, all you have to do is type in CME Fed Watch Tool. This will come up. If you see here, okay, there are 3 tabs. There are tabs on the side here. Can you see that? Those tabs that I kind of put that square around. The first one is the current meeting. The second one is historical changes of the current meeting. So in other words, if you want to see what the probability of a rate cut for the next meeting is, these tabs shows you that. This one says compare. It shows you the trajectory of the change of those expectations for the next meeting. What I'm on here is the probabilities tab, which is right here, okay? And what the probabilities tab shows you is the probability of the next, I think it's 8 meetings, okay? And in the blue is the highest probability event. So if you notice, the rates here in the blue shows no change at the first meeting of next year in rates, and then 6 25 basis point rate cuts are the highest probabilities going through the year, okay? Now, I think that's not only highly unlikely, but near impossible, simply because the economy is so strong. But if the global economy risk that I mentioned accelerates, the slowdown accelerates, and China does not recover in the least bit, this could become not only possible, but likely, because the US will be sensitive to the effect of China's economy on some of the other G7 economies and on their own.